We're on the floor of the New York Stock Exchange where Jim Cramer is going to answer your Twitter questions.
And boy, are we getting them, and that's terrific. I really want to encourage people at Jim Cramer because I love them, and I answer them here, not there.
Well, let's start. We've got a question on Under Armour. What's a good entry point for that stock?
Right here. I mean, Under Armour is a multi-year story. I always think that it's expensive. It will remain expensive. It's one of the great tech stories that also happens to be an apparel company.
How about Amazon? We've got a question from Harris who says, do you sell Amazon before earnings? Will it go back to spending after proving it's capable of making cash?
Well, we have to see what the Amazon Web Services company is really doing. We're hoping for a breakout to be able to make an informed decision. A lot of analysts jumping on the bandwagon ahead. I do expect a good quarter.
You touched on this on CNBC this morning, but your take on Wells Fargo's guidance?
Okay, Wells Fargo is a company that is a non-hype company that continues to motor higher. JP Morgan is obviously the star of the day. Wells Fargo 3 weeks from now will be higher, and maybe that's how we have to think.
Jim, Thomas Hooley asks, it looks like Apple's going to sell as many watches as possible. Why is the stock not reacting?
Because they're not going to sell as many watches as possible. They can't make as many watches as they need. This is a fashion accessory. Look at the deal they just made with IBM and J&J. It's going to be a health kit. It's going to be a device that tells you how your body's doing, like a dashboard. It's also going to be one where you're going to buy multiple bands. It's going to be a fashion accessory for years. Those who are trading this off the month, I want you out of the stock. Just please. Just like the guy who runs Restoration Hardware, Gary Freeman, said, get out of my stock. Get out of the stock if you're playing on the wall. Just get out. Please. I'm urging you. Get the heck out of that stock.
Joe is asking, Joe is asking, I sold Tesla, bought Twitter. Am I going to regret that?
Why? Why? Tesla, they keep cutting numbers. I mean, yeah, technically the stock looks good. Twitter, I think that someone should buy Twitter at a substantial price. I only would mention that because I think Twitter's doing great on a sales basis. Twitter's good. Tesla, it's a cold stock.
And Jim, finally, I've got $500 to spend. Best stock to make the fullest out of that $500 right now.
Your first $10,000 has to be an index fund. I am adamant about that. I don't want anyone with $500 to buy an individual stock. That's something I did. I now wear, but I was only after I put some money in index funds, or at that point in contra fund. I'm not going to countenance someone with $500 rolling the dice. It's not my style, and you should know better.
Jim Cramer, your very unique style.
Thank
Good
you.
to see you. We're going to have more Twitter questions from Jim Cramer this week. Remember, send them at #CramerQ. I'm Rhonda Schaffler for The Street.